Good afternoon, everybody. Brandon Davis with AmeriFirst Home Mortgage here in Poland, Ohio. It's football season. We're going to play a little game today. We're going to learn a little bit about how to buy a house. And typically speaking, when you're trying to buy a house, there's a lot of things that come up. What's the rate going to be? What's my payment going to be? How much of a house can I buy? What type of loan should I use? And so all of those things go into really the three parts that someone wants to know when they're buying a house almost always is: how much money am I going to need at closing? What's my payment going to be? And when do I need it? When's the closing date? And so what we're going to talk about today is one of those features to try to help folks determine what does cash to close actually consist of. And so behind me, there are some things that we want to go through and try to help alleviate any confusion that can happen either with the real estate agent, with the buyer, with parents, family, everybody that you're conversing with as you're trying to buy a house. And so behind me, what I have here is some terminology that we call, in the industry, cash to close. And so what you'll notice a lot of times are some verbiage that's shared between the real estate agent, the buyer, folks that are advising. What's my down payment? And many times that is used interchangeably with cash to close, and that's not an accurate way to convey how much money somebody's going to need at closing. Down payment, this is important, is not synonymous with cash to close. So let's talk a little bit about how that breaks down. As you can see, number one, down payment, is determined by the loan program that the borrower is pre-approved for. And with our team, we always try to look at what are the options that you will have en masse. What are the most pre-approval options that you can receive? And so it's not uncommon sometimes for borrowers to receive 2, 3 different types of pre-approvals. And again, as a reminder with our team, when we provide those pre-approvals, not only is a conventional loan able to be purchased for a house as is, move-in ready, that same conventional loan, you will have a renovation loan option. That's a different conversation for a different day. So today, down payment is a portion of the money that you need for cash to close. The second variable is closing costs. And that variable is something that many times the real estate agent will work with the borrower and the lender to determine, can we ask the seller to contribute a certain amount of money in the transaction towards the buyer's closing costs, number 2, and prepaid expenses. And so while that's going to help lessen what the buyer needs to bring to the table at settlement as part of their cash to close, when negotiating an offer, sometimes that realtor will want to put in how much the seller will contribute. And so these figures are not necessarily going to allude to the exact costs of the transaction. Instead, what they're going to do is they are going to lessen or decrease how much cash to close the borrower needs to bring at settlement. Number 3, prepaid expenses. Prepaid expenses are the amount of funds collected for property taxes, homeowners insurance, any mortgage insurance premium guarantees, or private mortgage insurance if it's a conventional loan that would be collected at settlement. And so you would add those figures together and you would determine 1 plus 2 plus 3 equals how much money somebody needs at closing. Let's look at an example. If I'm going to choose a conventional loan and my down payment is 5%, and we're going to buy a $200,000 house, down payment, $10,000, costs, $5,000, prepaids, $5,000. The borrower is going to need $10,000 plus $5,000 plus $5,000, or a total of $20,000 cash at closing. What we want to talk about is that figure can be manipulated a few different ways. And so for our purpose, when we meet with borrowers and buyers of homes that are going to be working with other folks like financial planners, family members, attorneys, etc., that are advisors into the ways that they are making financial decisions. We want to be as transparent as possible, raising the level of confidence so that people can begin to understand truly how is cash to close determined. That's actually something that we teach in strategy meetings. We talked a little bit about that in our last week's video, amongst some other things. So when you're trying to figure out how to buy a house, cash to close is not synonymous with down payment. Down payment is a function of cash to close, and that's the amount of money that you need at settlement. Learn about it over a strategy meeting, give us a call, and we'll talk to you a little bit about how to build that confidence level so that when you're out in the market, you can figure out how much money you're going to need, what your payment's going to be, and when you're going to close. This is Brandon Davis with AmeriFirst Home Mortgage, 330-565-9013. You can also reach our team at our office, 330-965-1808. Y'all be well. Happy buying.